Hey, what's up everyone, and welcome to the School of Personal Finance. The housing boom, it is on. We are all hearing stories right now of houses going onto the market, being sold within days for all cash at 20% above asking price. The prices of homes are growing at the fastest pace that we've seen since before the Great Recession. It is crazy out there right now. So in this video, I'm going to share my thoughts about this current market, home ownership in general, what's gotten us to this point, if there's anything that could actually slow this thing down, and where we go from here. All right, let's get to it. Home ownership, the American dream. Now, I bought into that at a very young age. I was determined to buy my first home right when I got married. So I got married at a pretty young age. I was 25 years old back in 2003, and me and my wife, we saved up 20% for a down payment. We bought a 2-bedroom, 2-bath condo. And I always looked at home ownership as a way to build wealth, as a forced savings. I knew I was always going to make my mortgage payment and prioritize that above everything else. So it would force me to save money inside of my home. And I would use projections of like the housing market going up by 3% a year and try to see how much equity could I build over the course of my life till eventually, when you have no mortgage and you have all the equity, it's a way to build wealth in this country. Little did I know that in 2003, all the way till I sold that property in 2008, the housing market would explode. So that house almost doubled during that time. And I was sitting on all this equity. So what else should I do but parlay that into a nicer, bigger home? We had just had our first son and we wanted to upgrade. So that's exactly what we did. And then the housing crash came. Luckily, I did move all of that equity into the new home. So even with housing prices dropping 30%, I was still okay. I wasn't underwater because we had made so much on that first purchase. But if that was the first home that I bought in 2008, I would have been clobbered and I would have had a terrible taste in my mouth. And that happened to so many people out there. So people are wondering right now, with home prices so high, like, how do you buy a home? Is it a smart time to buy a home as prices have exploded higher? And it's very hard if you don't have one to sell. If you're a first-time home buyer, you're being priced out of this market. So what is going on right now? Why is the demand so high and the inventory so low and house prices exploding? And it's been like the perfect storm, everything coming together to push these home prices up into the stratosphere. Now, if you own your current home already, then you might just be enjoying the ride and it doesn't really impact you or do anything, but you know your net worth is going up. You might just be sitting there like, great, my home is going up in value. I'm not moving anytime soon. I'm not making any moves. So it's just good. It looks good on my balance sheet and it's making my net worth go up, but it really doesn't have a day-to-day impact on your life. So why is there so little inventory right now? And there's a couple different reasons, but it actually starts with the Great Recession back in 08 and 09, when there was just so much inventory and so many homes for sale, where a lot of home builders, they went out of business. Either that or they just pulled back so much and we never really caught up. So we've had a shortage of new homes in this country for like a decade now, but there hasn't been this oversized demand. So home builders are trying to catch up, but now we have a new thing going on where the prices of everything has become so much more expensive to build homes. So that is one major reason why there is so little inventory. But then you stack on top of that COVID and people not wanting to move and not wanting to sell their homes, and they're just kind of staying put. That's another big reason why people just aren't selling their homes. And then on top of that, you have this whole cash out refinance boom that's happened, where interest rates have been so low that people have decided, you know what? I could actually pull cash out of my house, lower my interest rate, keep my payment the same, and put additions on my house, or, expand my living space, improve my living space, and I'm just going to stay put. I'm not going anywhere. So fewer and fewer people are selling their homes, leading to less and less inventory out there for people to buy. This article from the Wall Street Journal says that Americans pocketed $152.7 billion from cash out refinances over the last year. That is a huge number. And then on top of that, you have the forbearances. So anybody could go into mortgage forbearance right now and put off making their mortgage payments. So that's forcing people to stay put. Because if you're in forbearance, you're not getting a new loan, you're not moving, you're not doing anything, you're just staying there and waiting to see what happens. And your loan payments are probably going to get tacked on to the back of your mortgage. So that's another reason people aren't making any moves. So now newly listed homes, they are down 20% year over year. And now on the flip side, demand is sky high. You have people who are leaving the city areas and going to the suburbs because of COVID. You have millennials that are entering the housing market for the first time. You have investors who are just flush with cash looking for investment properties, looking to diversify portfolios. Now you have hedge funds. Here's an article from the Wall Street Journal talking about if you sell a house, that the buyer on the other end of that transaction might very well be a hedge fund. It is becoming more and more common. These hedge funds are getting into the single family home rental business. So with inventory very low and demand very high, it's basic economics 101, right? Low supply, high demand, prices are going up, and we are seeing it at a rapid pace. And it's not only that, people are paying with cash. So even the mortgage companies, there was recently an article talking about how much harder it is to qualify for a mortgage because the banks, the lenders, they are being very picky about who they choose to lend money to. So only people with the pristine credit scores with very large down payments. Let's use a simple example to drive this point home. Let's say that there are 10 buyers in a room. Let's say 2 of them are from hedge funds. Let's say 2 of them are small investors, maybe mom and pop type landlords, and the other 6 are families that want to buy the home. Let's say that 3 of them are pretty wealthy and they are using cash. They don't even need a mortgage to purchase a home. And let's say the other 3, they have down payments, they have median credit scores, they've been saving up, and they want to go out and they want to buy a home. So we have 10 different groups of people who are looking to buy homes. And let's say there are only 3 homes that are for sale on the market that they are able to purchase. If you own one of those homes, who are you going to choose? Are you going to choose somebody who could come with a cash offer, or are you going to choose somebody who has to apply for a mortgage and get approved for a mortgage where the process is much more complicated and not guaranteed? Or what if you're a mortgage lender? Are you going to give a mortgage to somebody who could only put 3% down compared to somebody who could put 30% down? Are you going to give a mortgage to somebody who has a 600 credit score compared to somebody that has a 780 credit score? You could see how what this does is it makes the wealthy wealthier. It puts people who are in a strong financial position in the driver's seat, and it leaves behind the normal person, the person who has been saving and trying to get there to be able to purchase their first home. They're being left out. So this is where the divide, it widens. So now you see many YouTubers out there and so many videos about the coming housing crash. And the reason that people are talking about that is because of the forbearance and the cliff, that at some point, all these mortgages that are in forbearance, that they're going to come off of forbearance and all these homes are going to go into foreclosure. But it just doesn't seem like that's the case. Like right now, the Consumer Financial Protection Bureau, they're trying to make changes. They're trying to push back the forbearance dates. They're trying to put in new rules as far as the process for foreclosing on somebody. So they're proposing a new rule that would establish a temporary COVID-19 emergency pre-foreclosure review period. So that would basically block mortgage servers from even starting the foreclosure process until after the end of the year. Now, nobody wants all these foreclosures to flood the market when the forbearance period ends. So they're going to be working with people. The banks don't want it. The government doesn't want it. It's not good for anybody if everybody's getting foreclosed upon. So they're going to start working things out. They're going to keep kicking this can down the road. They're going to try to work out these loans with borrowers. There's talk about being able to extend the mortgages to 40-year mortgages, lowering the interest rate, not even needing to qualify for these things. Just throwing your hand up and saying, listen, I can't make these payments. Can you work with me? And that the banks are going to be forced to pretty much work with these people. And it's in everybody's interest. So there's a good chance of that happening. So I don't see that all of a sudden, foreclosures are going to just start flooding the market and we're going to see a housing crash. And on top of that, there are so many hedge funds and investors out there that are waiting, that want to go in and buy up that supply, that the dip might be very short-lived, even if they do allow all these foreclosures to happen. So unfortunately, we might be in for a much longer road of increasing prices, low inventory, and high demand. You might be thinking to yourself, eventually something's got to give, but that might not be the case if they are going to allow homeowners to continue to basically do what the government does and kick the can down the road and extend their mortgages out further and lower the interest rates and accept lower payments than what they typically would have to pay on that mortgage. Everybody just might be able to stay where they are and continue in their home and make whatever payments they're able to make. And that's just going to continue to have low inventory out there because people aren't going to be selling. And what if interest rates go up? Yes, that could have a negative impact on the housing market, but at the same point, we'll continue to have low inventory if interest rates go up because people are not going to want to move. They're going to look at it like, I have this 3% 30-year mortgage, I'm not giving that up. I'm not going to sell my house and then go buy another house where I have to get a mortgage at 5%, where it becomes unaffordable. I'm just going to stay put. So there's a lot of reasons why inventory might continue to stay very low over the next couple of years. So if you are somebody that does not have a home to sell and you are looking to purchase a home, it's very hard right now. My best advice is to make sure that you are on very solid financial ground. Do not try to overextend yourself to get into a house. Make sure that you do have that 20% saved. And if you don't, there is no immediate rush to go out and get into a bidding war to buy a house. Continue saving, plow money away for that 20% down payment, pay off all your bad debt, get yourself in a very solid financial position so when the opportunity does present itself, you're able to jump on it and to go ahead and purchase a home. Work on your credit score, make all your payments on time, just practice good personal finances until that time comes. But don't try to get yourself into a house where it's tight. With home prices at this level, if we do have a downturn in the market, you could get buried. So you don't want to put yourself in that situation. Now, if you already own a home and you want to move, then it's fine. Then the risk that you run is that your house is going to sell like that and you can't find another one to purchase. But if you're selling high and buying high, then it's a wash. Those moves are fine. But if you're a first-time home buyer out there, if you're just looking to get into buying a house, it's a very difficult environment to do that unless you are sitting on a ton of cash and you are going out and making cash offers above asking price. Then maybe you'll be able to get into your first home. But it is a tough environment right now. All right, everyone, that is it for this one. I hope that you found that helpful. Please hit that like button if you enjoyed this video. Make sure to subscribe to the channel if you've not subscribed as of yet. And I will see you again next week. Thanks.